Hey, Friday morning. Thanks for joining me. I'm going to do some look. I'm going to go into quite a detailed look at the stock markets, which have baffled me really. This is a chart going back to, what is this date here? Oh, sorry. Okay, so that's October when the market reversed. Now, I did actually spot that the market would reverse and go up, if you remember correctly. This puzzled me. This was a very slow process. I thought it would be more of a V-shaped recovery. In the end, we did get that, of course. Now, there were some times along the way where I thought we might pause and turn around and go down, particularly this trend line in 100-day moving average. Then I wondered if the 200-day moving average would hold it. But we really only paused there. And then, of course, when we broke the 200-day moving average, we absolutely soared. Sorry, this is Emini S&P. I'm not sure if I told you that. So, what a recovery. Sorry, this is the DAX. Get it right. This is the DAX. So the DAX has gone from just over 11,800 up to 14,600. Just an incredible run in what? In a month or so. What was the low? That was on the 3rd of October. So I'm going to call it 6 weeks. Now, where are we? We are at the 500-day moving average. This is my green line. And we're at the 61.8% fib, which is at 14,594. Now, I've had my resistance level at around, I think it's 14,500, 14,600. That is the exact reason why. We've also got a peak here from June. So I'm going to call that the summer high. And that was at 14,700. So that's why I've got my stop loss above 14,700. Now, if we close the week above 14,700, that's going to be pretty positive for next week. I would be gobsmacked if that happens. You know, this really should be a very strong resistance level. We've got a serious swing high, a big Fibonacci level, and the 500-day moving average. We're overbought on the stochastic, no question about that. When you're overbought in a bull trend, in a bear trend, you know, the idea is to try a short position. So I think it could be worth it in the DAX. This is something that really is quite incredible. Look, I spotted this head and shoulders pattern in the DAX. The double top was the head, left shoulder, double top head, and then right shoulder. Break below the neckline was our sell signal. Market plunge, then retested the necklines of the head and shoulders, which is not uncommon, but that was one hell of a bounce. Dip, retest, down. Now, I really thought we were going to collapse here, but we ended up holding that support level down there. I'm not going to go into why. I thought it was a support level, but it was more of a support level in the US markets when they were bottoming around there. Anyway, we were oversold on the stochastic. Now look, we're just getting so close to retesting that neckline, 14,900. Okay, that is still 350 points away from where we are, but it's really quite an incredible run up. Oops. I really think that this is one huge short squeeze. I really think that the short sellers got a little bit too ahead of themselves and they've been taken out. I mean, they must have all been taken out at this stage. Yes, we have a potential bullish crossover here with the 50 crossing over above the 100. I can't rule that out. If you're looking for a reason to be bullish, that's the only one that I can find at the moment for the DAX. Weekly chart, 100-week moving average coming in at the 61.8% fib. Well, you know, mathematically, that's obviously pretty normal for the 100-week moving average to be in somewhere around the same area as the 500-day. Okay, that's it for the weekly chart and the daily chart for the DAX. Swiftly along to the S&P. Now, loads of trend lines on here, probably too many, but yeah, let me just take some off so I can just try and clarify this a little bit for you. I put the white trend lines on so they're not too obtrusive. I'm going to take this one off. No, I'm going to leave that one on. Now, not quite the crazy straight line move that we saw in the DAX for the S&P, but still an excellent recovery off a very good support level, which we did spot and we did expect. What am I going to talk about now? Okay, so we've gone all the way from 3,500 up to 4,000 and change, 4,050. You know, a 500 point recovery. For me, the big one now is the red 200-day moving average. It held really nicely back here in the summer. I think that's the August peak. Held nicely. Didn't do such a great job here, of course, but I think that it's about time these stock markets rolled over and turned down. We're getting a little bit overbought on the daily chart. There's no sell signal yet, but we could have a double top here. Look, let me open this up. Oops. done that again. Let's just open this up here so we can focus on where we are now. I'm wondering if this is a double top. Not the most negative candle on the first peak, but still long upper wick showing that the sellers did come in. Will we get something negative today? Will we retest that peak, which was at 40.50? We've got to 40.50 today, I'm pretty sure. What is the high of today? 40.49.25. The 200-day moving average comes in at 40.58. Now, if we were just to hold here or even just kiss the 200-day moving average and then see a negative candle off there, I would feel more confident that we do have a double top in place, and then we could break lower. Now, the real test then would be the break below sort of 39.10, which would confirm the double top pattern, and then we would be talking about a move down of at least another 1,000 points just to get the ball rolling. So we'd be looking at 3,800 rather. Sorry, another 1,000 points. Yeah, down to 3,800. Which would be a good support level, and I'd have to revise the whole thing again when we get there. So that's kind of an outline for the S&P. The tech market has not been as strong as the S&P, certainly not as strong as the Dow Jones. We'll have a look at that in a minute. We're really being held by, here we go. This is the whole move down from January. The 23.6% fib of that whole move is around 11,950. So we're really struggling there. We had one day when we managed to break above there, at the beginning, about a week ago, but we couldn't hold it. We got a long upper wick. The market closed below the 23.6% fib, so it's definitely doing its job. We're there again now at around the high is 11,933 for today so far. 100-day moving average comes in at about 12,000. There's a lot going on in the 11,900 to 12,000 area, and we are still most definitely in a bull trend for 2022. So I'm looking for the market to roll over quite soon, turn around, go down, resume that bear trend. You look at social media, you would think that we were in a strong bull trend, and people have actually forgotten that we're in a bear trend, and we should turn down eventually, according to trend following strategies. And we should actually break the previous low of 10,485. Anyway, that's my theory. I'm sure I'm looking for a market to turn. Now, the Dow Jones, a bit more like the DAX, absolutely roaring. Double bottom here. I notified you of that. I suggested that was a buy signal, and wow, we've really taken off. Hit that trend line. I thought that would be it. Trend line and a couple of trend lines and the 500-day moving average. I thought that was it. I thought the Dow was going to turn around and crash from there, but it didn't. And look at it now. I mean, this isn't a resistance area. We're even trying to break above the August high. August high, the summer high, 34,246. Okay, we haven't quite managed to hold above there, but we did get to 277. So maybe that's the only resistance level that I see. Do we hold the August high? Interest rates are higher than they were in August. I think the economy should be slowing down more. We should be in a weaker position than it was in August. But looking at the Dow Jones, you would not believe that to be the case. Here's something I want to show you, which is just a bit of fun, really. The chart on the right, this one here, is the Emini S&P from January. This is the green candle in January, up to where we are now in November. So you can see a fairly steady decline, a fairly obvious, this is the monthly chart, a fairly obvious bear trend with a bit of a recovery over the last 2 months. This is a chart of the Emini S&P from, I think that's October 2007 to August 2008. So this was the beginning of the global financial crisis. This was what happened just after the peak of 2007. And this is where we are from January 2022 to November 2022. Now, okay, not exactly the same at all, but, not wildly different. Down for a few months, then a bit of a recovery, then down for a couple of months like here, and then a recovery, small recovery here. Some similarities, not exactly the same, but some similarities I could argue. Here's what happened immediately after that point. Boom, 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 boom. Right, so this is where we were in, let me just check where I am now. This little candle here is August 2008, when the market had declined about 20%, roughly the same as we've declined with the recent rebound in the Emini S&P. What followed from there is we dropped from about 1,300 to about 650. So we dropped another 50% basically, very quickly. 1, 2, 3, 4, 5. Well, we did most of it in the next 3 months, obviously. I mean, the vast majority of it within 3 months, we'd crashed. And then we just went sideways for 2 or 3 months and finally hit 665.75, and that was the low in March of 2009, end of the global financial crisis. Then we had interest rates slashed, QE pumped like it was going out of fashion, and of course eventually the market recovered. So bit of fun. Are we at this point right here, right now, as I speak to you in 2022? Will history repeat itself from 2008, and will we see the market over the next 3 months plummet almost 50%? Who knows? I don't really hold a lot of value in trying to see where things happened like that before and trying to project them again, but it's just very interesting. Off with this. This is the Emini S&P. This is September 2000. September of the year 2000. Now this was just before the internet bubble crash, whatever you want to call it. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months into it. We're 11 months into our little move like this, and then the market collapsed. So, just for comparison purposes, it was I've just shifted the chart along. So this is now May 2001, where we had the little bounce back similar to what we've experienced in the last couple of months or last month or so for the Emini S&P. There's your bounce back, and then this is when the market really crashed. So we went from 1320 to be precise, down to a low of 760. So not quite 50%. I don't know what that is. Let's call it 40%. But that's obviously a pretty significant move. The whole thing was obviously a lot bigger. We came down from 1500. That was a 50% crash from the absolute peak. But I'm just taking it from that little bounce back here into May. Where is it? May 2000. There we go. This is May. So this roughly compares this little move down here with the little bounce back, which is where we are now, comparing it to 2001. Then it was really when the market accelerated to the downside. I mean, the next, again, 3 or 4 months really plummeted, little bounce back, then crashed. So I don't know, if you look at what happened in 2001, 2007, 2008, you do have to wonder whether that is where we are now, and we are about to plunge from this little 2-month bounce back and then now dump 50%. Well, if we did dump 50%, we would be down around here, 2000, around, well, that would take us to, nicely actually, to the 200 week moving average. It would only actually take us as far as the COVID crash low, which was 2,174. Can you believe that? We more than doubled from the COVID crash low with all that crazy QE free money. So if the market was to crash now, as I'm not suggesting it will, but I mean, it wouldn't surprise me, and we did dump 50%, it would only retest the COVID crash low of 2020. So it would really only take us back to a low from 2 years ago. Not really that big a deal, is it, with a 50% crash? And we'd hit the 200 week moving average, and we would bounce off there. And actually that also ties in perfectly with a 61.8% fib, which comes in at 2,250. So it's a reasonable, well, it's a very good support level, and it's not an unreasonable target for us to drop 50%. Well, I'm sure. So I'm praying that this happens. But I just thought that was a bit of fun for you. I hope you found that helpful. If you like what I do, then please have a look in the description box below, where I've got various offers on some of the products and services that I offer. And please do like, share and subscribe. Make sure you hit the notification bell so you are alerted when I release a new video. Thanks a lot.